dude and dudettes. It's John, your stay at home designer. We got a lot of closing and opening trades to cover. It's been busy, but it's a good start to the week, so I'm happy with it. And let's get into it here. So, first closing trade we had was NVIDIA. Now, this was actually last week, and it was before the earnings that came out. NVIDIA had great earnings that came out, so that was nice. That worked not only in our favor, but it does help with my long-term thesis. I like this stock, so that's great. But we had the 918 expiration, closed it out, 66% profit. We held days in trade. We're at 25, so not too bad, and we're well below. I think current price on the stock's like 510 or something like that, so not too bad. We ended up doing pretty well in that almost month in trade, so that's good. And I did have some plays that were actually not really part of the mean reversion and trend following strategy that were related to NVIDIA for earnings, so that's one other reason I closed this out. Otherwise, I probably would have held it to 75, 80, 90% profit. Let's go over an additional closing trade that happened in Yum Brands. Now, Yum, expiration 9/4 of 2020, 65% profits, and we were 31 days in trade. So, likewise, these were open around similar timeline, and they took a while, but not bad. Yum was profitable, so I'll take that. I'm happy. But I did not like the liquidity in this type of in the market for Yum. It was terrible. So basically what would happen is you'd be entered into these put spreads, and it'd tell you like, oh, you're at a profit. And then it'd say, oh, you're at, zero, or you're basically down now. And then it's like, oh, you're at 80% profit. Oh, you're at negative 50. So it kept doing this literally for 31 days straight. And every time you put in an order, even if it was in for like a stop loss or something, it would not fill, and it was driving me bonkers. So that's something you got to keep in mind. And I've actually started to adjust my screens now. So when I'm looking for trades, I actually get rid of the ones that don't seem to fit a more liquid market, because I don't want to sit there and deal with it. And then the worst case, what could happen is if it goes lower and you can't get out, you're just going to ride that thing lower and lower, and your loss basically gets bigger until you either get to your defined risk or you lose a lot of money. So that's not a fun trade to be stuck in. So keep that in mind if you're ever looking around. We had another closing trade here, and this popped this morning right when the market opened. Actually, FedEx, my good to cancel order, hit. So ended up at almost 60% profit, 58.3. We were at the put strikes at 185 and 180, and this was nice. We were at 12 days in trade, which was awesome. So I will take that, and where we're at here, today's being the 24th, we're basically in the last week of the month almost. 100% win rate, and I don't know how I feel about that. Normally you'd want to, tell the world and tell everyone how amazing you are, but the way I've seen this when running the numbers, doing a lot of back testing, is that if you're trading at 100% win rate, it either means you're not taking enough risk, or you're not trading enough, or maybe the market's irrational. So here's the problem, is that I don't know which one we're in. There's arguments I think we could for all three, but I do have a little bit of hesitation related to the market, so maybe that is related. Maybe they're all relational, and that could be tied to my 100% win rate, but I don't expect this moving forward. It's not something I'm shooting for. Typically, I want to shoot for about 70%. 70, 75 is usually a target for me, and I'm not going out there to intentionally lose, but I'll take that. So, all right, opening trades. We did have a couple. So the 9/18/20 contracts, Moderna, mRNA. We're looking at the 72% chance of success, and took in 143 for my credit receive, which is great. So targeting about 65% profit here. But one thing that was interesting with Moderna is in day one of trading, I was already at 20%. Honestly, I should have filled and taken it, but I kept getting greedy, and my 25% target wasn't ever hit in day one. So that is interesting, but another trade we did today was CRM, and this was interesting. I actually, of the orders I put in, I did not expect this one to fill at all. But throughout the day, usually I'll have about 5 or 6 orders in place, and I set them at kind of a higher risk reward for myself for a few reasons. One, those are all comfortable in case I need to get into loss territory or manage the trade. Being at certain credit received and risk levels and spreads, and my chance of success typically tends to work out very well. So I'm happy that this filled, but it literally filled in the first couple seconds that I entered this trade for CRM. So that was a little bit interesting, but if we're looking here, it looks like CRM's probably going to have earnings maybe today or tomorrow. So that could also be an explanation. But I like seeing this uptrend there. That's great. We're almost at fresh highs, and it's definitely triggered my trend following strategy. So I'm okay with that. What else did we have? FTX closed. You'll see here, I think when we entered, the stock was trading around $200, so it's gone up quite a bit, 217. Yeah, that's not too bad. So FedEx was great. That was a good trade. Yum Brands. This one was 31 days in trade, so you'll remember Yum. Whoop. There we go. 31 days in trade for Yum. And that was 31 excruciatingly sideways days in a market that was not liquid. So that was a little bit tough to watch, but I'll take a profit all day, every day. NVDA, not bad. So yeah, NVDA 508. Gosh, I think we're at like 390, 395 for our strikes, so good support there. But that was a good month. Okay. And then the last trade was CRM. So CRM, Salesforce. Yeah, the earnings coming up. Moderna is the other. mRNA. Okay, so Moderna has been coming down a little bit, and this is part of my mean reversion trade. It's looking good. We do have support here at around the 55 mark, so that's a pretty good line, and that's where our strikes are sitting at too. So we'll look to manage around there, but we do have a good chance of success. We're defined risk. I'm happy with it. I'm not too worried. Looking here at the 60 strike actually. So there we go. But all in all, let's look at the overall market. All right, NASDAQ, the Qs, we are up, just an uptrend, a very boring uptrend. SPY's S&P 500 is fresh highs, but not a lot of conviction. It's pretty quiet. So that's interesting. Usually when we hit all-time highs and it's kind of quiet like that, that either tells us we're waiting for something or there's no more buyers at this level. So we'll have to maybe be careful, see where we're at. I think IWM's the weakest. This is Russell 2000. Yeah, that's we keep hitting resistance and bouncing down, and no new all-time highs there. So Russell has the weakest movement, but it looks like we are a little low on conviction at these levels. So I'm curious to see where it goes. Let me know what you guys think. And as you know, I'm just a random dude on the internet, going through my portfolio, but it certainly is not financial advice for you guys. I'm not a financial advisor, but I am someone who wants to help us all learn from this. So use this for educational purposes, but there's no more smoke in the air, so I'm going to try and spend some time outside, and I think you guys should take a break from staring at charts too. So enjoy it. I'll see you on the next one. Thanks for stopping by, my dudes and dudettes. Bye bye.